Ventures. We are a hydrogen-focused venture capital fund. We're based in London, and we have investments all around the globe. We have 2 funds with a cumulative value of about 400 million that we're busy deploying into the hydrogen space. And we are backed by a range of limited partners that all have a strategic and financial interest in the hydrogen space. So as you can see, we've got a range of Asian and European investors, all of whom see the value of the hydrogen opportunity as we move towards decarbonisation of not just the energy space, but of the broader industrial space. We invest in early stage startup technology companies. So we're talking Series Seed, Series A, Series B, and we like to follow all the way through. So provide investment to these startups for as long as possible before we can hand over to our big brothers and big sisters in the growth equity phase. So we have our view of the hydrogen value chain. It's a little bit multicolored, as you can see it up there. And apologies if you can't see it all the way in the back. But we think about investing in hydrogen as being very important to think about how the value chain needs to evolve to be able to support hydrogen as a commodity. And so we think about investment in the upstream, the midstream, and the downstream in the hydrogen space. So as you've heard this morning, the upstream is all about the production of low carbon hydrogen. Like the other 2 speakers, we are very interested in low carbon hydrogen, whatever color that may be. So for us, what's also very, very important is carbon capture, storage, and utilization, which you can see down the bottom there. So that's also a big interest area of ours. In the downstream then, we're looking at applications for nearer term commercialization. So you're thinking about an investment that you're hoping to be able to exit within sort of somewhere around 8 years' time. So you need to know that there's going to be a near-term market for you to be able to sell into when you come to exit your investment. So, the right-hand side will change over time, but at the moment we're looking at things in aviation, in shipping. Funnily enough, even though those are quite mature long-term industries, they are facing near-term transition requirements, forcing them to adopt these new technologies in the near term. We're also looking at the industrial opportunities as well, where we see the opportunity in power to steel, power to chemicals, power to fuel. And that's quite interesting because that's where you can see that carbon capture piece that we talked about on the production side being required to create some of the plastics and some of the fuels of the future. And then we're also looking at the opportunity for hydrogen or one of the derivatives of hydrogen, such as ammonia, to play a role in the decarbonisation of the energy sector as well. So that's how we think about the hydrogen investment opportunity. And we're very much looking for constraints. We're looking for the pain points, something that is prohibiting the creation of value. And we want to target our investment in those areas of constraints and thereby unlock value for the entirety of the value chain. So this is a little bit of a schematic of where we've deployed our capital to date. So you can see we've put it all throughout the value chain. So we've got some investment in the upstream in various forms of hydrogen production. We've got investment in carbon capture, point source carbon capture. We've got investment in a range of different downstream applications. And we've also been very, very busy making investments in the midstream. The midstream to us is absolutely critical because as the 2 earlier speakers spoke about, the midstream really is what enables you to develop these large-scale projects and get your product to market. And so where we see the opportunity is to develop low-cost, safe, efficient ways of being able to transport large volumes of low-carbon hydrogen from wherever it's being produced on the west coast of Australia, North Africa, and to be able to get it to the demand centres of Korea, Japan, Northern Europe. So we are actively looking for new investments, actively looking for further opportunities for us to place capital in places where we see a constraint and we can create value for the whole of the hydrogen space. So where are those constraints? This slide, and again, really sorry for the small writing, but this slide gives you a view of where we see the constraints presently. And as I said before, these constraints will evolve. Obviously, they're not fixed in time. Hopefully, we can start to tick off a few of those as we go along. But you see constraints being a big bunch of constraints still in the, the green hydrogen space, I suppose, for want of a better word. So hydrogen coming from renewable energies. And those constraints are still very much around how we make it as efficient as possible, and how we verify the fact that you have created hydrogen from renewable energy sources. We also see a cluster of constraints in the carbon capture space. So that's for both point source capture and for direct air capture as well. So there's lots of interesting technologies that are being developed to address those constraints there. On the midstream, there's a range of different opportunities for investments. So we see opportunities for new catalysts to improve the energy efficiency of transformation of hydrogen to carriers like ammonia or liquid fuels. We see the opportunity to improve the integration of hydrogen with renewable energy, such that, again, you can optimize the efficiencies there. We also see opportunity for improvements in gas separation technologies, and we see opportunities for new businesses to be developed, new business models to be developed around trading, verification, carbon counting as well. And then on the downstream, a whole bunch of different opportunities to produce more efficient fuel cells, more efficient engines that can handle hydrogen, to treat and abate NOx. And then obviously in the industrial feedstock play, there's all sorts of really interesting things going on to develop direct electrolytical pathways to be able to generate fuels and chemicals and even steel. So lots of opportunity for us investors. Just to give you one example of how we like to work as a fund, this is Amogy. Amogy was a spin-out from the Korean Institute of Science and Technology, founded by 4 MIT PhDs, 2 of whom were Forbes 30 under 30s. They are based in New York, and they developed miniaturized ammonia cracking technology. And we were very excited by this when we met the team in early 2021. We saw that it was going to address a number of different constraints. It could crack the ammonia very, very efficiently. It had a novel catalysis that enabled them to do this. They were integrating this system within a powertrain, which meant that it was a viable alternative for transport. It removed the need for an engine. It removed the need for NOx abatement. And so for us, this was a really exciting technology that addressed a number of different constraints in the downstream. It also enabled the use of ammonia for these mobile applications. And why that was particularly interesting was that addressed a lot of constraints with the midstream as well, because it's a liquid fuel, it can be efficiently stored and handled, and it's widely available. So this particular investment hit lots of different pain points within the hydrogen value chain. We invested in the company at spin-out, so we were alongside them as they scaled their technology, first from a 5 kilowatt drone through to a 100 kilowatt tractor, onto a 300 kilowatt truck, and early in the new year, they'll be demonstrating a 1 megawatt system on board a tugboat in the port of New York. This application is particularly exciting because Amogy system will be able to provide zero carbon power for cargo ships, for remote power, for hydrogen generation, and so addressing a big range of decarbonization opportunities. Oops. Look, very quickly, it's important to remember that as a technology investor, technology is not the only thing that we look at. Actually, what's really, really critical is the commercial piece, which I touched on previously. So we're thinking about not just, is the technology innovative? Can the technology make a difference? But for us as a financial investor, what is the commercial opportunity here? Is this going to be adopted by the market? Is this going to be something that creates value for investors? So that's really, really important. The other thing that we also look at is the team. I spoke a little bit about the Amogy team. They're incredibly impressive, and we look for founders that we know can carry this technology and this commercial development all the way through. So finally, I suppose, what I'll leave you with, or maybe some of the questions that you might want to talk about when you turn to your partner, is, so what do you consider to be the most significant constraints in the hydrogen value chain today? And how can technology play a role in addressing those constraints and hopefully unlocking those? Which of those do you think could create these near-term commercial opportunities? And what could we be missing? Where else can we find disruption, that can be able to address or unlock, I suppose, the hydrogen value chain for all of us? Thank you very much.